Good afternoon and welcome to this week's weekly Market Matters video update for Wednesday, June 8. Today, we're going to talk about a lot of different things today, but we're going to talk about what's driving markets first. James, it's obviously been quite choppy over the last few weeks. Fell away yesterday, bounced back today, but what is driving this volatility at the moment, James?
Yeah, I think intraday volatility is going to be driven by whatever news flow is happening on the day. Obviously, yesterday it was around the RBA rates decision where they raised interest rates by 50 basis points, 0.5 of 1%. The market was expecting 25 basis points, but there are a few outliers. So, 10% of economists were expecting 50 basis points and then a few more at 40. And they, the RBA, I think, did the right thing and increased rates by a more aggressive 50 basis points, taking the benchmark to 0.85%. I think that the reason they've raised rates is around inflation. I think that's what's driving markets at the moment, Harry, to your point. So it's around inflationary expectations. So if you think from a broad perspective, determining what something is worth, it's really important that you get to have a handle on what inflation is going to look like going forward. And right now we don't. So, if inflation is going to be 5%, you can go out there and price a bond pretty easily. You can, you might be pricing a bond with a coupon of 7%. If you know inflation is 5%, you know what to put in your equity valuation model. So right now we've got these push and pull around, whether or not, I think we've moved from inflation being transitory, but you look at the RBA statement yesterday, they're still saying inflation is hotter than we expected now, but it's still going to come back into the 2 to 3% target band by next year. So I think that's, as I wrote yesterday, that's a pretty fanciful interpretation of what we're seeing at the moment. It may play out, we don't know. And I think it's that uncertainty around inflation and thus the trajectory of interest rates that is really driving markets. So as we get more data coming through and data that sort of supports that potentially inflation has peaked and is tracking lower, then I think the market will get a bit of clear air. Until then, I think we're going to remain choppy in the near term, Harrison.
Definitely. A few sectors are obviously a little bit more leveraged to interest rates than others, retail being one of them, property being another one. There are some pretty high yields on offer in these sectors now. You think about a couple of years ago, property was sort of doing 3% yields. Now that's sort of pushing up into the 4s, 5s and 6s. Are they starting to become attractive, particularly maybe for the income portfolio in particular across the Market Matters suite?
Yeah, it's a really good point. So if I look at the market in the last 6 months or so, there's been pain felt in property stocks as well as retailers. So that's been another area that has felt some pain. We saw last night another downgrade by Target in the US. That's weighing on our retail sector on the Australian market today. If you go back to comments before around interest rates and what is now priced into the market, obviously we're at 0.85%. The market is already pricing 3.1% cash rates by December of this year, and then 3.5% by the middle of 23. So there's a lot already baked into that. So if I look at the property stocks, I was looking at Centuria is one I look at, CNI, quite held in the past. We've held it in the income portfolio. I follow it pretty closely. I mean, that's moved from 350 down to the low 2s. So that's been a big preemptive decline in the share price on the expectation that rates will go up, and that'll put pressure on asset prices, so underlying real estate, which is sensible. My view now is, have these sectors gone too far? Have they preempted all these rate increases that we're likely to see? I think yes, is the short answer. I think by buying them now, we're going to be fighting the trend. So that's the caveat. But I think, things that are yielding 6-7%, I think are attractive. In the retail space, it's a little bit different. So you've got and I guess to a degree, the property space, what's discretionary and what's not discretionary. So non-discretionary expenditure, I think, is something we want to be exposed to. Stocks that have been sold off because retail has been soft, but they are non-discretionary items like supermarkets and the like. The discretionary side, we've got to be a little bit more cautious on.
Yeah, okay. More on this income portfolio as well, James. NAB has launched their latest hybrid deal today. They actually wrapped that one up early for new money today. What's your take on this hybrid offer from NAB?
So, I mean, it's a fair offer. They're offering 3.15% above the 90-day bank bill rate. If we factor in the trajectory of interest rate expectations moving forward, and that's what hybrid pricing does. So it's grosses for franking and also includes the trajectory of future rate increases. It's yielding nearly 7% gross for franking. So that's relatively attractive in this market. I think, from it's a it's a rollover in an existing security. So it's not going to be a lot of new money availability in this security. So look, it looks fair. It was about 20 basis points above where the market was trading at the time. So that's a fair margin for a new issue. If I think about hybrids more generally and what we're going to be doing in the space, Harry, I think 2.7% as an overall margin is reasonably expensive in the space. I think near a 4% is very cheap in the space. So we're now sort of into the bottom, the low threes. I think, if volatility continues, credit spreads widen a little bit, we might get to 3.5. But I think, that is going to be sort of that fair price in the hybrid space. So if I'm buying a hybrid on an expected yield to first call of 7% per annum, I'm pretty happy, and it supports the income requirement for an income portfolio. And importantly, they're floating rate, so they hedge you against the outlook for rising interest rates, inflation, and the like. So you don't have to get your interest rate call right. You can hold a hybrid, and if interest rates rise, you'll be getting a better return. And that's the other clear takeout that I'd say this week. Savers and income investors have had a real win this week. So the market's down, dividend yields are up. Income on fixed income securities are also up. So you can construct a lower risk income portfolio, sort of targeting that 8% mark, a lot easier now than you could in the last 12 to 24 months.
Definitely. To finish off, James, we're going to talk about portfolio reports and portfolio performance rather for May. It was a very choppy month, but I'll let you run through the 5 portfolios we've got.
Yeah, so we had a mixed bag during the month. So the ASX was down about 3%. The income portfolio we've just been speaking about was down 2.7%. Our growth down 4%. Our international equities down 5%. ETFs down 2.5%, and the emerging companies was down 7%. So some mixed outcomes. Obviously, growth orientated areas of the market struggled again. The more defensive, value orientated areas of the market, banks and resources actually did reasonably well last month. And then some of the more edgier parts in the emerging companies also struggled. The Small Ords was down a fair way during the month as well. So not a great month across the portfolios, but again, it shows the level of risk and return profile of individual portfolios. So the income being the most defensive, lowest risk, consistency is continuing to deliver, and the emerging companies is that real zing factor, the X factor that will do well if risk comes back on.
Definitely. Finally, James, I'm going to put you on the spot here. You've got your Blues on today. State of Origin game 1 tonight. What's your prediction for that one?
Well, I hope New South Wales win. I think it's going to be a tougher challenge. I think leaving out Jake Trbojevic in the team, I think, is a big mistake from Freddie. We've had Freddie in our offices recently, talking about Origin and all of that. I think it's to me, Jake Trbojevic is an Origin player. He should be there. I don't know why he's not. But he's not. So go the Blues. Hopefully it's not hopefully the Maroons don't come down to Sydney and spoil the party, Harry.
Good on you. Thanks, James.
Thanks, guys.